So we've talked about JPCHF the other time. So we've talked about this market, and I said, so when price was pushing to the upside, just like I said maybe price was just like pushing to the upside to come and test this is 1.8 Fibonacci level. So you draw the Fibonacci starting from this last higher low, drag it to this recent lower low, and then wait for price to get into it, for price to create another like lower high. So we have a lower high here, we have a lower low, and we're expecting price to create another lower high. So that's why. So as soon as price go into this 1.8 Fibonacci level, price like starts getting rejected back to the downside. And this was like I was talking about at the time, that if price now start trading below this level after price break above it, if price now start trading below it, I will still be waiting for a retest. So and that's what we are having here. So what I'm waiting for to get into this particular setup is for price to retest. So that's just like what I'm waiting for. Now price was currently like pushing to the upside a little bit. So after price break it to the downside like this, so I'm expecting for price to retest it. So after price retest it, then we should have a break of this counter trend, and then I will go into a sell trade. So let's say price now like continue pushing higher to got into this key level here. So after I got injected and also breaking this counter trend, after a 4-hour candlestick break below this counter trend, then I will go into a sell trade. So and my stop loss will be above this key level. So if you are placing your stop loss have to go. So if you are selling at a resistance, your stop loss have to go above the resistance, and if you are buying at a support, your stop loss have to go below that support, and that's what I will be doing here. So my stop loss will be going above this particular resistance here, and also we have a break and we have a retest. So obviously this retest will be the last high that price creates at this point. So it will be like the recent high that price created here. So I'll put my stop loss above it, and also I'll be putting it above this resistance level. So as soon as price just like as soon as we have a retest of this level and then price broke the counter trend line, so that's when I'll be looking to go into a sell trade. But one thing about this particular type of setup is that it's not every time that you are going to be getting the retest. So in most cases, price might just like continue dropping back to the downside. But for me, I won't take that type of setup because I still have like other setup that I'm looking at. So I'll just like have to ignore it. But if price continue pushing back to the upside and then you have a retest of it, so then I'll be selling. But if that did not happen, so I'll just like ignore this particular setup and then look for another setup. So if I go into a sell trade, just like I said, my take profit will be below this key level here. So my take profit will be below here. So I can just like put it here because we have like a key level here. We have like a support around this area here based on how price move away from it. So we have like a support here. So I'll just like put my take profit here. So this is just like how this particular setup is going to be. So hopefully price continue pushing back to the upside to retest this particular level before I start looking for selling opportunities. But that's just like how I'll be getting into this particular trade. So price, looking at I've already done all the necessary analysis. So I'm just like waiting for the entry. So after doing the analysis, all you just have to do is just for you to wait and then wait for the market to come to you. So I'm not actually chasing the market. I'm just like waiting for price to like, I'm just waiting for everything to unfold. So if price just like it tests this level, we break a counter trend line. So then I'll be interested in selling this market. But for now, I'm just going to be watching it. So we got the trend line here. We got the double top. So this was a double top, and we have the neckline here. And apart from this key level being like the neckline of this double top, it was still a valid support level based on how price moved away from it. So this was obviously on the monthly time frame. So we could see how price creates all these bullish candlesticks. So this shows that this was a strong support level, and we have a break and we have a test of it. So all I'm going to be doing is just waiting for price to retest it and for me to start looking for selling opportunity, and that's what I'm currently waiting for, and just in line with the Fibonacci level. So all I'm just waiting for is just for price to like retest this particular level. So after we have a test of it, so then I'll be interested in getting into a sell trade. That's just like how I'm currently looking at it. You can see that as soon as price go into the 70.6, this is 1.8 Fibonacci level, price continue dropping back to the downside. So how we just like need to wait for is just for price to test this level. After we have a test of this level and then price continue getting rejected, so then I'm interested in getting to a sell trade on this particular. So on this particular setup as well, so I'm looking to get into this particular trade So I'm currently looking to get into this particular setup. So let me take out this first before. Now let's look at it on the 3 months time frame, right? Now looking at this market on the 3 months time frame, you could see that this was the ranging market here around this point. So let me take this out as well. Now I already draw my key level, right, and I noticed that this was a ranging market. So price was just like moving sideways on the monthly. So price moved to the downside, moved to the upside. So price have been choppy around this level. So price have been moving sideways. So just moving sideways, we not actually have any clear direction here. So price was moving from a support to a resistance, from a resistance to a support. So then after that, price breakouts, and just like I usually say, whenever we have like a range market, whenever price was like ranging, moving sideways, all you have to wait for is for price to break out of that range. So if price break to the upside and we have a retest, you are going to be looking for a buy. And if price break to the downside and we have a retest, you are going to be looking to sell. And that's what we have here. So we have this. You could see that on the weekly time frame, you could see we have this, we have a break of it through this bullish candlestick here. So price break out of it and we have a retest. And then going down to the daily time frame, you could see now. So if you look at the daily trend, you could see that this was a bullish trend. So price was creating a higher high. We have a higher low, we have a higher high, we have a higher low, we have a higher high, we have a higher low here. So this might be the next higher low, and then price might just continue pushing back to the upside. So that's why I was like looking to buy from here. So apart this being the top of this range, so this was also a key level, like a major level drawn on the, I think I drew it on the, maybe on the monthly time frame or on the 3 months time frame. So this was a major key level. So price got into it. After we have a break, we have a retest of it, and then this was still in line with the Fibonacci level with this maybe 61.8 Fibonacci level. So this was still in line with the Fibonacci level, as you can see. So price got into the 61.8 Fibonacci level, got into this key level, and also the 70.6, like the 50% Fibonacci level, and price was like now moving to the upside. And not just that, so we still have a counter trend line that I'm still expecting price to break before I start looking for buying opportunity. So we already got, like, price already break out of the range. We already have a retest of it. So price going to the Fibonacci, and then so all I'm just like waiting for at the moment is for price to break this particular counter trend line. So as you can see, price was still like rejecting it. So that's why most of the time it's better for you to wait for a break of a counter trend line. So if not for this counter trend, I would have already been on this trade, and now price was like still like got rejected from this particular counter trend line. So we have the first touch here, we have the second touch, and this was like the third touch. So now price was currently gotten rejected from it. So it does not matter if price goes into the support level anymore because we already have a test of it. So what I'm just waiting for is just for price to like break out of this counter trend line. So if price break out of this counter trend line, let's say we just have a 4 hour candlestick, like 4 hour bullish candlestick breaking out of this counter trend line. So I'll be getting into a buy trade as soon as a 4 hour candlestick break out of this particular counter trend line. So after we have a break of it, put my stop loss below the last low that we have here. So put my stop loss here, and then put my take profit. So I might just, so I did not think we have any major key level at the top, but okay, I think we do. So I might just put my take profit to maybe the next support and resistance level. And if we don't have maybe any key level nearby, so I might just like go with, so let's go with this key level based on how price go ejected here. So I'll just like go with a maybe a key level or target maybe 1 to 3. So let me just target maybe 1 to 3 risk reward. So maybe if price just like goes into this level, I might just like close out the trade. And if I see that okay, maybe the market was bullish. So most time, how the reason why you hold your trade depends on how price was moving, like how significant price was moving. So let me show you like this particular example. So on this particular setup, so this trade already hit TP. But in a situation like this, whereby you are just seeing a series of bullish candlestick, let's say you are like maybe looking to maybe take your profits from here. Let me just like use this example. Now, let's say you got into a buy trade here, and then you target. So let's say you target maybe want to, let me delete this. Let's assume that maybe you just like target maybe want to, okay, let's say you target maybe 1 to 6, maybe 1 to 6 risk reward, and you see how price was creating all these bullish candlestick. So all these bullish candlestick shows that this market still have like the buyers are still in control, like the bulls are in control based on how price was forming all these bullish candlestick. So you can now decide to like move your take profit to the upside a little bit for you to maximize the profit, because you know that price will still continue pushing back to the upside based on how price was creating all this bullish candlestick. So all this bullish candlestick shows that there was like enough strength for the market to continue moving back to the upside. If the market was moving to the upside and then creates one bullish candlestick, create another red candlestick, a bullish candlestick, red candlestick. So that shows an exhaustion. Like price might not continue, like price might not be able to go into this level. But seeing all this bullish candlestick, this shows like the market there was like enough strength to keep pushing the market back to the upside. So even though you do not like put your take profits maybe to this level, so let's say you just put it to maybe somewhere around here, but you seeing how price was forming all this series of bullish candlestick, so that way you might just like decide to put your take profit around this level just for you to maximize this, like for you to maximize the profit. So how you place your take profit might just depends on like, so on a normal day it should be at the next key level, like at the next maybe resistance level if you are buying. So if you are buying, you put your take profit to the next support and resistance level. So if price go, you know that price might definitely be selling back to the downside. So that's how it should be. But you can decide to go for one issue three. That price might not even go to that maybe your support level, that your resistance level, or maybe that your support level. You might just like close the trade if you see that okay the market was not trying doing good. So, but one thing you know, you have to know that if you got into any trade, before you go into any trade, that trade should be giving you at least one ratio two risk reward. And what I mean is that whatever amount you are risking on that trade, you should be aiming to make times two of it back. So you don't like risk $50 to make back $50, or you should like risk $50 to make back $75. If you are risking $50, you are expecting to be making maybe $100, 150, 200, or maybe more. So like you have to go with the minimum risk to reward that you have to go for is one ratio two risk reward. So times two of whatever you are risking. And sometimes you might go for maybe times three, which is one ratio three risk reward. So that's how you do it. So for this particular trade, it was like one ratio nine risk reward. So whatever amount you are risking on this trade, you are making times nine of it back. This is just like how you do it. And about the stop loss, just like I said the other time, you are putting your stop loss below a resistance level. So you are going to be putting your stop loss below a resistance level and the last low that price created. So this was the last low. So the stop loss was like quite below this last low here. Few people below it. So this is how the stop loss is going to be. But most importantly, if you are buying, your stop loss must be below that support level that you are buying from. So if you are buying from a support level, your stop loss must be below that particular level that you are buying from. And if you are selling from a level, your stop loss must be above it. So let's say you are buying from here. Let me use this as an example. So let's say you are buying. So let's go to the daily time frame, right? Let's say you are buying from here. You got into a buy trade. Let's just say after you see this bullish candlestick, your stop loss have to go below this key level and also below this like candlestick, just a little bit below it like this. So to be on the safer side.